Lost everything because I broke rule number 3. Now, I'm going to show you exactly how to avoid making the same mistake that cost me 6 years of savings in just 48 hours. Let me be brutally honest with you. Most people will work for 40 years, retire broke, and spend their final decades wondering where it all went wrong. They'll blame the economy, their boss, the government, or just bad luck. But here's what nobody wants to admit. Financial failure isn't random. It follows predictable patterns. And financial success? It follows rules, 7 of them to be exact. I'm going to share something with you that took me years of painful mistakes to understand. These aren't complicated formulas that require a finance degree. They're not secret strategies that only billionaires know. They're simple principles that have stood the test of time, from ancient merchants to modern tech founders. The problem is that simple doesn't mean easy, and most people never follow them long enough to see the magic happen. In the rapidly evolving economic landscape we're living in right now, the way we interact with money has completely transformed. We live in an era of digital assets, instant transactions, cryptocurrency, NFTs, and globalized markets where you can move millions across continents with a single click. Technology has revolutionized how fast money moves and how accessible investing has become. Yet despite these massive technological shifts, the fundamental laws governing wealth remain as constant as the tides. They haven't changed in hundreds of years, and they won't change in the next 100 either. Many people spend their entire lives working for money, trading their time and energy for a paycheck. Yet few ever take the time to understand the actual physics of how wealth grows, stays stable, or completely vanishes. True financial mastery isn't about luck or possessing a genius-level IQ. It's not about being born into the right family or getting that one perfect investment tip. It's about adherence to a set of timeless principles that work whether you're in New York or Jakarta, whether it's 1926 or 2026. Whether you're just starting your career fresh out of college or you're looking to protect a lifetime of hard-earned savings, these are the 7 golden rules of money that will define your trajectory toward real freedom. Pay attention, because each one of these rules has the power to completely change your financial future. The first foundation: you must create a mandatory surplus. The first and most vital law of wealth is remarkably simple, yet it's the one that gets ignored more than any other. You must consistently spend less than you earn. Period. No exceptions, no excuses. I know what you're thinking. That's obvious. Everyone knows that. But here's the reality check. Most people don't actually do it. They know it intellectually, but their bank account tells a different story at the end of every month. Most individuals fall into the trap of what's called Parkinson's law, which suggests that expenses always rise to meet income. It's like a law of physics for your finances. If you make $3,000 a month, you'll find a way to spend $3,000. Get a raise to $4,000. Suddenly your expenses magically become $4,000 too. New car payment, bigger apartment, more dining out, subscription services you forgot you signed up for. To break this vicious cycle, you must create what I call a mandatory surplus. This isn't about living like a monk or depriving yourself of every small pleasure. It's about valuation and priorities. You're making a conscious decision that your future security and freedom are more valuable than a temporary purchase today. You're deciding that the you of tomorrow deserves better than living paycheck to paycheck. In 2026, the most successful people I know treat their savings like a fixed cost, like a mandatory tax they pay to their future selves before any other bill gets settled. They automate it so it happens before they even see the money. 10% minimum goes straight to savings or investments the moment the paycheck hits. Some do 15%, some do 20%. The specific number matters less than the habit of making it non-negotiable. Here's the harsh truth. Without a surplus, you have no fuel for the engines of investment. You're running on empty, working hard but going nowhere. Every financial opportunity requires capital. You can't invest without money to invest. You can't weather emergencies without reserves. You can't take calculated risks without a cushion to fall back on. The engine of growth. Put your money to work immediately. Money is not static, it's biological in nature. It has the inherent capacity to reproduce and multiply. This is the essence of compound interest, what Albert Einstein famously called the eighth wonder of the world. And he wasn't exaggerating. The second golden rule is to put your surplus to work as early as humanly possible. Time is the secret ingredient that turns small amounts into life-changing sums. A 25-year-old investing $500 a month will end up with more wealth at 65 than a 40-year-old investing $1,500 a month, even though the 40-year-old contributed way more total money. That's the power of time and compounding working together. In the current market environment, simply holding cash is a guaranteed losing strategy because of the eroding power of inflation. Your money is literally becoming less valuable every single day it sits idle in a regular checking account. In 2026, with inflation rates fluctuating, your purchasing power can decrease significantly over just a few years. You must make the mental transition from being a consumer to becoming an owner. Stop just buying stuff and start buying assets. By investing in diversified assets such as low-cost index funds, solid equities, or productive real estate that generates rental income, you allow your capital to generate its own income stream. Over time, if you stay consistent, the children of your money begin to produce grandchildren. Then those grandchildren produce great-grandchildren. The snowball gets bigger and rolls faster every single year. The ultimate goal is to reach what I call the crossover point, where your invested capital generates more monthly revenue than your physical labor ever could. That's when you've achieved true financial freedom. You work because you want to, not because you have to. The fortress wall. Protect what you've built. Here's something nobody talks about enough. Wealth is often significantly harder to keep than it is to make in the first place. I learned this lesson the expensive way, and it almost destroyed me financially. The third rule focuses entirely on protection. Every financial endeavor, every investment, every business opportunity carries some level of risk. That's unavoidable. But the golden rule of money is this: never risk your core capital on speculative get-rich-quick schemes, no matter how tempting they look. The marketplace in 2026 is absolutely flooded with high-risk opportunities. Cryptocurrency projects promising 1,000% returns. Volatile digital assets that swing wildly. Startup investments that sound revolutionary. Day trading schemes that promise you can quit your job in 6 months. While some of these can work out beautifully, they should only ever represent a small play portion of your portfolio, money you can genuinely afford to lose without affecting your life. Your foundation, your core capital, must be shielded through proper diversification. This is the most important concept in all of investing. Do not put all your eggs in one basket, no matter how sturdy and reliable that basket looks today. History is filled with sure things that collapsed overnight. Companies that seemed invincible went bankrupt. Real estate markets that only went up suddenly crashed. Diversification is often called the only free lunch in finance, because it's the one strategy that reduces your exposure to catastrophic loss without sacrificing returns. It keeps you in the game for the long haul. When one asset class struggles, others compensate. When stocks crash, bonds might hold steady. When real estate slumps, commodities might rise. You're building a fortress with multiple walls of protection. Become the architect of your own destiny. One of the greatest and most costly mistakes people make is outsourcing their financial destiny entirely to others and then never checking in on what's happening. They hand everything over to an advisor, cross their fingers, and hope for the best. While professional financial advisors definitely have their place and can add tremendous value, the fourth golden rule is that you must be the ultimate architect of your own wealth. Nobody will care about your money as much as you do. Nobody. You don't need to become a Wall Street analyst or spend hours every day studying charts, but you absolutely must understand the language of money at a functional level. This means knowing how taxes affect your actual returns, understanding the fees associated with your investment accounts, which can eat away massive amounts over time, and recognizing the crucial difference between an asset, something that puts money in your pocket, and a liability, something that takes money out. In the digital age we live in, ignorance is genuinely a choice. The information is out there, most of it for free. Dedicate just 30 minutes each week to improving your financial literacy. Read books, watch educational content, take online courses. Learn the basics of how the stock market works, what bonds are, how retirement accounts function, what tax advantages exist. When you understand the why behind your investments and the logic of your strategy, you won't panic and make emotional decisions when the market faces its inevitable downturns. You'll have the confidence to stick with your plan because you understand it's built on solid principles. Master your emotions, or they'll master your wallet. Money is fundamentally a logical tool, a neutral medium of exchange. Yet the vast majority of people manage it almost entirely through the distorted lens of emotion, specifically the twin demons of fear and greed. Greed is what drives people to buy at the absolute peak of a market bubble, when everyone is excited and prices are inflated. Fear is what drives them to sell at the very bottom of a crash, locking in their losses permanently. This buy high, sell low pattern is exactly backwards from how wealth is built, yet millions of people do it repeatedly. The fifth golden rule is to develop emotional neutrality around your investments. Successful wealth builders operate on systematic rules and strategies, not feelings or gut reactions to scary headlines. They use proven approaches like dollar-cost averaging, where you invest a set amount every single month, regardless of whether the market is soaring or crashing, whether news is good or terrifying. By removing the human emotional element from the transaction, you avoid the common psychological traps that destroy returns. When the market crashes and everyone is panicking, your automatic investment keeps buying, getting shares at discount prices. When the market is euphoric and everyone is buying, you're still buying your regular amount, not getting swept up in the mania. Treat your investment portfolio with the cold, detached objectivity of a scientist performing a carefully controlled experiment. You have a hypothesis, a strategy based on historical data and sound principles, and you execute it consistently, regardless of how you feel on any given day. Your greatest asset walks around with you. Here's a truth that will transform how you think about wealth. Your greatest wealth-generating asset is not a stock portfolio or a piece of real estate. It's your own ability to provide genuine value to the marketplace. It's you. The sixth rule is to never stop investing in what economists call your human capital, your skills, knowledge, and capabilities. The marketplace is evolving at a pace we've never seen before. The skills that were valuable 5 years ago might be obsolete today. The jobs that exist today might not exist in 10 years. By continuously acquiring high-leverage skills, abilities that dramatically increase your impact and value, such as leadership, technical proficiency, artificial intelligence literacy, strategic communication, or specialized expertise, you increase your earning floor. You make yourself more valuable, more irreplaceable, more capable of commanding higher compensation. There's a simple truth in economics. The more you learn, the more you earn. Every new skill you master is a multiplier that increases the value of every hour you work. If you can do something that few others can do, you can charge premium rates for your time. Financial freedom is reached exponentially faster when you focus on both increasing your income through skill development and decreasing your expenses through smart financial habits simultaneously. It's attacking the problem from both sides. Money as a tool for meaning. The final golden rule is perhaps the most profound and the most overlooked. Money is a means to an end, not the end itself. True wealth includes the wisdom and ability to use your resources to create positive impact in the world around you. Hoarding money out of a sense of scarcity, constantly afraid of spending anything, leads to a poverty mindset even if your bank account shows 7 figures. You become a slave to your wealth rather than its master. Purposeful distribution, whether through charitable giving, supporting family members who need help, investing in community projects, or funding causes you believe in, creates a healthy flow of capital. It reminds you that you control your money, it doesn't control you. Furthermore, and this is something I've seen play out repeatedly, giving strategically often opens doors to new networks, relationships, and business opportunities that purely selfish accumulation never could. Generosity builds social capital, trust, and goodwill that translate into unexpected benefits. A life of true prosperity is one where your wealth actively serves your deepest values and priorities, not the other way around. Money should be the tool you use to build the life you want, not the master that dictates how you live. Your next move determines everything. Applying these 7 rules consistently requires real discipline. I won't sugarcoat that, but the rewards are genuinely incomparable. We live in a world of instant gratification and social media pressure, where society constantly pushes us to look wealthy, to display status symbols, often at the expense of actually being wealthy behind the scenes. The golden rules demand the opposite approach. They ask for temporary sacrifice, delayed gratification, and sometimes uncomfortable choices in exchange for permanent freedom and security. They require you to think differently than most people around you. Start today by honestly auditing your current financial situation against these principles. Are you spending more than you earn every month? Is your money sitting completely idle in low-interest accounts, or is it actively working and growing? Are you making investment decisions based on solid data and strategy, or emotional reactions to headlines and hot tips? Financial freedom is absolutely not a destination you reach by accident or luck. It's a house you build deliberately, brick by brick, habit by habit, decision by decision. By following these 7 laws with consistency and patience, you're not just managing currency or building a portfolio. You're designing a life of sovereignty, security, and the capacity to make significant impact. Your future self, the version of you 10 or 20 years from now, is waiting and hoping that you'll make the right choice today. That choice is to start building according to these principles right now. Not tomorrow, not next month, today. Start building the financial foundation that will support the life you actually want to live.